Hey guys, how's it going? It's Andy from Magoo Investing. Happy Wednesday. One of my favorite things about this channel is anytime I change anything in my portfolio, whether it be buying or selling any stocks, I usually make a video having to justify the reasoning behind my decision. And there's been a couple of times where I've done that and I've gotten like halfway through a video explaining why I did something, and then I'm just kind of sitting there, I'm like, ooh, that was really dumb. And so I ended up reversing that. But in today's video, I don't think that's going to be the case. In today's video, I'm going to be talking about 3 reasons why I decided to buy my favorite airline stock overall. This might seem kind of weird because if you've been paying attention to the airline industry overall, there hasn't been a lot of news recently. We had earnings for many of the airline stocks at the beginning of this month, but for the past couple weeks, it's been pretty dry. But I decided to take a position into my favorite airline stock, and I'm going to explain the reasoning behind why I did it, explain the positioning size, and kind of talk about what I saw on the charts. Before getting into today's topic, I wanted to go over a couple of news stories that kind of jumped out to me from after my last video was posted on Monday. One of the most interesting ones has to do with Kodak stock. And if you saw last week, they had a 2,000% increase as a result of a huge loan from the federal government. And yeah, 2,000% is ridiculous. But there seems to be some questionable movement in the stock beforehand. And so the day before the news was announced, the stock went up 25% with no news, and it was on really high volume. So as a result, there were some calls for an SEC investigation, and as of yesterday, that is officially happening. So insider trading is one of those things where it seems pretty obvious a lot of the time, and we'll see what the SEC decides to do with this one. Also yesterday, Disney, ticker symbol DIS, announced earnings, and it was very interesting across the board. So I wanted to talk about some of the numbers that jumped out to me. Some of the interesting numbers was a $3.5 billion hit to their operating income, which was a lot better than expected. But there were some positives that came from the 100 million total streaming subscribers across all their platforms of Disney+, Hulu, ESPN+. And when you compare that to Netflix, obviously Netflix is still the top dog, but it's pretty impressive to see how popular Disney+ has become in just the less than a year that it's been out. And then overall, they had a loss of $4.7 billion in the last quarter, which is mainly as a result of the theme parks being shut down. And Disney was a stock that I sold pretty recently, and going into this earnings report, I didn't expect them to blow things out of the water, but that 100 million subscriber number was pretty impressive. This is a stock that I hope to get back into pretty soon, but I'm just kind of waiting to see what happens with the overall pandemic. Okay, before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on what I decided to do with my stock portfolio, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it. Hit that like and subscribe button, as it would help my channel out a lot. You guys have been killing it with the support recently, and let's aim for 100 likes on this video. With that out of the way, let's get started and talk about the 3 reasons why I decided to buy my favorite airline stock right now. If you've been around on this channel for a couple months, you'll know that my opinions on the airline industry have changed significantly over the past couple months. When the pandemic first hit, I was like, stay away from airlines and cruise ships specifically at all costs. They seemed like a horrible decision to be buying into those stocks. And then things kind of changed when Warren Buffett decided to sell his stakes in pretty much all of the major US airlines. And that's when I started kind of looking at it further, because Warren Buffett has been one of those guys that is a value investor. And I personally saw a lot of value in the airline industry. And anytime you see people starting to get fearful, that's when you're supposed to be taking advantage. So I started doing research on the airline industry right about then. And then I talked about how I decided to take a position in Delta, ticker symbol DAL, right before their manipulated run back in May and June, and made a lot of money off of that. But since then, the airline industry has been pretty boring overall. There has not been a lot of news, and stocks have been steadily declining for the past couple months. When I put up the 1-year chart for the stock I did buy, which is going to be Southwest, ticker symbol LUV, you can see that since that run in May and June, the stock has just kind of been steadily sliding, making lower highs and lower lows, which is pretty bearish overall. But seeing that slide gives me a lot of opportunity to talk about why I see a lot of potential in the airline industry, and specifically about Southwest, ticker symbol LUV. So in this video, let's get started and talk about the 3 reasons why I decided to buy Southwest. The first reason is mainly because of the airline industry as a whole. Right now, the airline industry is down significantly. And when you look across the board, the 2 industries that have really not recovered since the pandemic started have been the airlines and I guess travel industry, and then energy stocks. And so right now, Southwest is down 40% year to date, which gives a fantastic opportunity. When you look at all the other airlines, they're pretty much all down between 50 and like 35%. So you're getting a fantastic discount for any of the airline stocks overall. It makes a lot of sense why all these stocks are down, considering the demand for air travel is at a historic low. When I put up this chart, and I'm going to apologize, it's pretty hard to read, it shows the number of people that go through TSA on any given day. The black is from 2019 and blue is from 2020. And so you can see at the beginning of the pandemic, people were still flying, and then there was a rapid decrease in demand, and it started to slowly ramp back up, but it seems to be plateauing at this point. And if you've been looking around recently, there's been a lot of problems considering a US passport is one of the least accepted passports in the entire world right now, and there's very few countries that you can actually go to. And so air travel demand is at an all-time low, but as I mentioned, these stocks have been pretty flat recently. As I mentioned in the couple videos that I've made about airline stocks overall, I don't think that there's a crazy amount of risk in these stocks right now. Obviously, they can fall significantly, but there's not as much bankruptcy risk as I would think with some of these retail stocks out there. And some of the main reasons behind that is the Federal Reserve and the federal government has shown that they are not going to allow these airline stocks to fail. This comes with the massive bailout that came in, I don't know, what was it, April? That protected all these airline stocks and pushed them up to recent highs in the past couple months. And so it doesn't seem like any of these airlines are going to be going under anytime soon. Just because they aren't going to hit zero in the next couple of years doesn't mean there's not risk. That's why I've decided that the airline industry overall looks pretty good for a recovery. And that goes with reason number 2 and why I think that Southwest is the best airline stock out there right now. And when I've said best in the past, people have kind of pointed in other directions. Some people have said United, ticker symbol UAL. Some people have said Delta, ticker symbol DAL. But personally, I think Southwest is the best option by far. And that mainly comes because I think it's the safest overall. When you look at the major US airlines and compare them, most of them are pretty similar when it comes to their types of flights that they're operating. Sure, there's a variety of international flights, with Delta and American being the highest when it comes to international travel, but then you look at Southwest and it's mainly domestic. And as I mentioned, some of the restrictions on travel and the fact that business and international travel is just not going to be what it once was is going to hurt places like Delta and American significantly. Also, before I go any further, stay away from American at all costs. I hate that stock. Anytime anyone brings it up, I get pretty upset. There's so many better options in the airline industry, and yeah, just stay away from it. If you're going to buy a beaten down airline stock, just go with like United or something. But anyway, Southwest has some of the best fundamentals overall, and that was one of the main reasons why I've kind of switched my thinking from Delta being my favorite stock to now going to Southwest. When you look at revenue, it has fallen recently. By recently, I mean it was pretty significant from year over year, but the trend from the past decade is very positive overall. And then cash on hand is one of those areas that I look at to see how safe a stock is going to be overall. The cash on hand has increased significantly in the past quarter as a result of needing additional protection during the pandemic, and it's currently sitting at $14.5 billion. And so that mainly comes from loans and other areas like that. When I look at long-term protection, considering all these airlines are going to have a lot of cash on hand to protect themselves, I like to look at long-term debt to equity because it shows the overall health of the company, in my opinion. When you look at Southwest, you're going to be seeing the best numbers. Before the pandemic, their debt to equity was 0.3, which is incredibly low. This is a number that I wouldn't even expect with a lot of the blue chip stocks overall. And now it has spiked. It's around 1 at this point, which is still significantly lower than a lot of these other airlines. When you look at Delta, it has gone up significantly in the past, and that just has to do with the size of the operation that they're running. And right now, their debt to equity ratio is currently sitting just below 3. And so it's significantly higher, and I'm sure if we looked at American or United, they'd also be very high. And so the long-term debt to equity, I think, shows the overall health of Southwest and is a main reason why I think it's the best airline stock overall. In addition to the domestic routes that they fly, the same planes that they're doing maintenance on, I think there's a lot of positives. And I think when people start coming back and want to travel, I think price is going to be a huge factor. And I think Southwest, with their competitive pricing, will be very attractive to the average consumer when things start to open up and you can fly safely. All right, reason number 3 is actually going to be the main reason why I decided to take this position. If it was just for reason 1 and 2, I probably wouldn't have decided to make any moves. But reason number 3 is going to be technical analysis. So we're going to hop onto the computers and talk about what I saw in the charts that made me decide to take a position in this stock. And so we're going to talk about that, and then I will summarize the video when we get back. So let's head on over to the computer and talk about what I saw. All right, so here we are on the long-term chart when it comes to Southwest, and as you can see, things have not been very good for a while. Highs of 59 back in February on Valentine's Day, and then the fall started. And so we're not really interested in the long-term stuff, so we're going to back it up and go to the 180-day chart, because this is where we see the interesting stuff. So I've already charted this out, and I've talked about it in a past video for my stocks that I was looking to buy. Here I am now. I'll go to Active Trader and show that I own 25 shares at a price of $31.32. Made a nice $20 so far on it today. So the important thing for what I was looking at is I charted out the support, which I hopefully is pretty easy to see now, especially now that it's on the chart. But it's been touched once, twice, 3 times, almost there, 5, 6. So basically, the more times that a support is touched, the stronger it's going to be, and the more momentum you're going to need to break through that. And so the things that I'm looking for to break through supports and resistances are major news events and earnings. And I kind of expected this earnings report back in July to be the catalyst to push it lower, but that didn't happen. It just kind of was pretty flat. And what that tells me is the market is just kind of waiting for positive news to push the stock up. As you can see, the stock has been steadily declining since its highs back in early June. And so it's fallen, tried to push up, made a lower high, lower low, and then the lows have now come down to this support. And in that video, I talked about waiting for it to come down into this area, into the zone, and see what happens. And what I wanted to see happen was it go into the zone, hang out there for a little bit, and then get pushed out of it strong. And we definitely saw that. On Monday morning when I was recording that video, I was just kind of sitting down, getting ready to press the record button, and I got my notification that it pushed above $31. And so I quickly came over onto the computer, and by that time it had pushed up, and as a result, that's why my price is $31.30 and not pretty close to $31. So I was a little slow on the trigger finger, but as you can see, I'm up around 2% right now. And so the important thing to see here is you need to have a plan. When you're seeing a technical trade like this, especially in a stock that's been in a recent downtrend, you need to have a plan. And so the reasoning behind why I only decided to take 25 shares, I would normally take a full lot and try to sell a option against it. But my thought process here is we need a break of trend. The stock has been continuing to go lower. My short-term price target is going to be the $35 mark, but I wouldn't be surprised if it falls through this support. And so that's why I took a smaller position size, because I'm happy to add to it later. I wanted to kind of dip my toes in and get some exposure to the airline industry, but I think it's pretty likely that it might go lower. And so if it does, I will be adding to my position. And then I'm going to set an alert. Let's draw that out. If it gets to the $35 mark, that is when or if it pushes above that $35 mark, that's when I'm going to be adding to my position. So I think it's just important to not just buy into a stock and hope for the best. You need to have a plan. Some people don't like managing their trades that much, but when you're in a beaten down sector like airlines, I think it's important to have a plan, or else you might get caught and the stock falls down to its recent lows and you're in for a tough time. So overall, Southwest is a very interesting stock. As I mentioned, it has a lot of potential because I think it is the best airline stock overall. But as I've also mentioned, the charts look pretty bearish overall. You've had a downward trend for a while, and I'm taking a position based off of a very solid support that we've seen on the charts. And if it falls through that support, I don't think I'm going to be closing on my position. But this goes into position sizing. This isn't one of those like slam dunk plays that 100% of the time it's going to work. So as a result, I scaled into this position pretty small at the beginning just to kind of see what happens. If it falls through that support, I will probably wait and add on to my position. And if it pushes up higher and shows that it's going to stay above that, I'll likely add to the position as well. But I think it's very important with some of these risky positions to take a small position size at the beginning. One of the problems that I see with a lot of people is they see an opportunity and then they go all in. And while that will make you a lot of money if things go well, we're also in the middle of a pandemic and you kind of need to protect yourself. The larger your position size, the more vulnerable your account is going to be overall if you have some bad news about a specific stock. So diversification of your portfolio is very important. I don't like to have like 15 different stocks in my portfolio, but I think it's nice to have a variety, maybe between like 5 and 6 stocks, to kind of balance out some of the risk. So let me know what you thought about my analysis of the airline industry and why I specifically picked Southwest, ticker symbol LUV, in the comment section down below. Thanks for watching. I appreciate all the support, and I will see you on Friday.